So hey guys, on today's video I'm going to show you on how to start trading either Forex, indices, crypto and all that step-by-step guide from beginner stage, right? So first thing you have to do is you have to know what market structure is, right? And what is market structure? Market structure is basically how the market moves. We know that the market doesn't move in like straight direction, right? The market doesn't just go up like this forever, right? You see some retracement, then it push up, it goes down, it push up. This is like an uptrend. Then for a downtrend, the market push down, retrace, come up here, retrace, right? So basically, this is how the market moves, and I'm going to explain it bit by bit for people that doesn't really understand. And if you know the market structure of the market, it's really easy. That's like the price action, the way the market moves. It helps you analyze what you want to do, either you want to buy or you want to sell. So now let's see for downtrend right here. For downtrend, you can see for downtrend the market is impulsive, right? So we can see this is a downtrend example of a downtrend, right? How do we know it's a downtrend, right? We have this right here. We have this impulsive move right here. The impulsive move right here. This is the impulsive move, right? Right here is the impulsive move, and this is the correction move, right? We can see that this other impulsive market, which is this one right here, broke out of the previous low, which is this, right? And this is how you know the market structure. So let's see, let me write, let's just, mm, so for a downtrend, we have the lower high, and the lower low. So this is the lower high right here, and this is the lower low. So this is what comprises of a downtrend. For those that does not know yet, we have lower high, and we have lower low right here. So when you're looking at this, this is what the market structure is for a down move, right? So when we see a break of structure right here, this one right here, you can see this impulsive move, like I said previously, this one broke the previous low, right? And it retraced up. Then this is now our new lower low. Then we can now see that this impulsive move broke it. So it shows that the market is continuing to push to the downside. And this is how you read when the market is on downtrend, right? So now let's see an uptrend. An uptrend. So for an uptrend is similar, right? We have a move pushing to the upside. Then we have some sort of correction, goes corrected, then a push, right? So for an uptrend right here, we can see the uptrend will be, we will have an higher low and the higher high. So this will be an higher high, this will be an higher low, then this will be an higher low, and this will be an higher high. And that's how you know what is an uptrend, right? How do you know that? Is we can see, just like I mentioned previously, we can see we have this impulsive move right here. Then we retrace, this is the retracement. Then we can see that the next impulsive move, which is this one right here, the next impulsive move, which is this one right here, broke the previous higher high. And that's how you know the market is going uptrend. And just like that again, we had the impulse, this impulse right here, we had the retracement right here, and we can see that the next impulsive move that we have actually broke the previous high. So that's the trend for us to know that the market is going to continue to the upside until any other thing happens, right? That's how you know that the market is probably going to continue to push to the upside until market change. And there's another thing that we all know, right? It's called ranging market or consolidating market. So let's see, ranging or consolidating market. So when you're talking about ranging or consolidating market, what we talk about is the market doesn't move the way the downtrend or the uptrend moves. It just moves sideways, right? Kills like this. It's not giving us higher high, higher low, right? It's not always perfect like this, but it just gives us some sort of like a ranging market that basically is just like um basically it's just ranging like a box. So if you draw a box, you can notice that the market is just ranging in that kind of box, right? And like I said, it doesn't have to be like equally or perfect. You can see the one I drew here, it's not that perfect. So it's but it's still ranging, right? Because it's not giving like a solid structure, just like the first and second example I gave you on the downtrend and uptrend. So that means the market is ranging, right? So those are like the basic market structure of the market. Um, so let's see, market structure. So those are like the market structure of the market. So basically, this is how the market moves, and this is just pure price action, right? If you understand how the market moves like this, then you can now analyze it based on how you want to do it. Maybe you're using supply and demand, resistance and support, or you're using trend line and all that. That all depends on what kind of strategy you want to be using. There are millions of strategy out there, and me personally, I believe everything works. You just have to find the edge of that particular one that you're interested in, and you can feed off of the market from that, right? So, but you have to know price action and market structure, and this is like the foundation of you starting on how to trade, right, from beginner, and you can add more things to it, confluences for us to for you to get better and be more advanced. So basically, this is what market structure is, and you can actually start trading simple trades from here, right? So I'm going to show you an example on a proper chart on how you can just use just the normal market structure to kind of trade, right? So now let's go to the chart now to look for an example on how you can do that. So now let's see, right? Let's look for an example of a downtrend based on market structure, right? So I'm going to use this particular price action we are seeing here to make an example of a downtrend. How do you know a downtrend, right? First of all, like I said, I explained to you, you want to make sure like the downtrend has an impulsive move, right? So we have an impulsive move, a correction, an impulsive move, a correction, an impulsive move. You can see. So this is what we call a downtrend, right? That's what we call a downtrend. Let's see. So now I'm going to show you something right here. How do you know this particular stuff? because we can see like the previous price action we have, we can see that we are buying, right? We can see we have this right here, we are buying. We have this, 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 right? You can see. And how you know about this is because the market now is transiting from um buying to sell, right? Because we can see right here that the market, if I put this right here, we can see that we have um okay, let me put it like this for easier understanding. We can see we have a higher low. Let me just put, I'm gonna need an higher high too. I'm gonna need a lower high. I'm also gonna need a lower low. Okay, now we can see that we have this right here, right? We have a lower low around this area right here. We have a lower high, yeah. This is also a lower high. This is also a lower high. Right here is also a lower high that we have right here. Then we have a lower low here. Let's see, 24, 25 to see. We have a lower low here. And we also have a lower low here, right? So now we can see that the market transited from a uptrend to a downtrend. So how do we now confirm that the market is now a downtrend, right? So for us to confirm, we need a change of market structure. And the change of market structure is something like this. Let's say we're on an uptrend, right? We're moving up, down, down, up, down, right? Then the market structure will be, we have an impulsive move that broke the previous higher low, right? Then it comes up right here, retraced around this area. Then the next impulsive move gives us a break of structure, right? Like this. And that's when we know the market has changed. And the market has changed from, you can see, the market has changed from an higher high, an higher low, right? Now we can see the market has changed now to this. Oh, sorry. The market has changed now to a lower high. Then we have a lower low, right? Then now a lower high, a lower low. How do we know, right? We can see now that the market broke this previous higher low. Oh, sorry. This right here is supposed to be here. What is an higher high? Right? So we can see that this impulsive move right here has broken this previous higher high, higher low. That makes it the market has changed, and now the market is now on a downtrend because this was broken, this broker structure was broken, and when we retraced, right, it didn't push up to give us another higher high here. You can see that when we retrace, it didn't push up to give us another higher high, it gave us a lower high, and the impulsive move after the lower high also broke this previous structure right here. So that signifies that the market structure has changed, and that's how you know when the market structure changes. So now what we're going to do now, I'm going to go back to the chat and just show you guys, continue the example of what I was saying, right? Let's just delete this ones. Hmm. Okay, so now we're going back to the example we have. We can see we have a lower right here. We have a lower high here. No, I'm not gonna. We have a lower high here. Then we have a lower low here. Then we have a lower high here, right? So we can see now that the market broke structure right here. It broke this previous lower high here with this impulsive movement, right? Which now creates our lower low. And now we can now see that when the markets now push to the upside, as you can see, we push to the upside. The market did not push to the upside to break this previous high, right? It didn't break this previous high because that was the previous high we have for the uptrend. You can see that the market did not break the previous high. The market actually stopped here, which is lower than the previous low right here. So that shows that the market structure has changed from bullish to bearish, and I hope you understand um, my explanation, right? So that is how you know the market is in a downtrend. So basically, after this, you won't be looking for a buy anymore because you can now see based on market structure that the market has changed from buying to sell, right? And now you'll be looking for sell to buy. And most of the time, it's better to for entries, it's better for your entries to be on a retracement, right? You can see there is this impulsive move right here. Don't just drop and enter a trade right here. This is a disaster because one, your stop loss will be really high, and secondly, you don't even know if the market is going to break out or it's just going to move your opposite way. So that is why it's always better for you us to take trade when it's retraced, right? So let's say example right here, when the market retraced around this way right here, if you want to take trade, right? Now you cannot see that, oh, okay, I can take trade around this area because the market is now rejecting around this area right here. You can see. So first of all, we have the breakout structure, which shows the market's structure has changed, right? Second of all, we now have a lower high, and you've been seeing that whenever the market gets to this area, the market bounces around this area. So there's that two possibility that the market might retrace around that area, right? To give us the impulsive move before we now continue to give us a direction. So from here, it's safe to take your trade here, but like I said, this is gonna be like a basic um tutorial. There is more to that. You just don't take your trade just because the market's rejecting around that area. You need more confluences, and confluences is just additional stuff that just makes sense, that combines everything together to um to solidify your direction, right? So now that you think, oh, you want to sell, you just need additional stuff. Maybe first thing you need is, like I said, the first thing you might need is the fact that whenever the market gets to that zone, there's a lot of retracement. That's first. I won't take. Okay, no. Second, first that will be second. The first is like we had a break of structure, right? The market broke structure, so it's confirmed now that we're going to sell. Second confirmation will be when the market gets to the zone, like I explained earlier, that there's always a rejection, right? We can see one rejection here, two rejection here, and three rejection here. So that also is a confluence, right? And that confluence that I will look forward to. At least you want to have three or more confluences that solidified your your direction, right? So maybe like candlesticks. I will understand candlesticks. Maybe see an impulsive candlesticks or like chart pattern, depending on how you want to trade. That's what I said earlier on, that like the varieties of how you can trade. You just have to learn and practice and practice and practice, and you just stick to what you think is good for you. Like I said, I think all strategy works. You just have to understand the edge of that strategy, and that's how you can profitable with that strategy. So that's what I'm gonna do next, right? So let's say I use chart pattern, right? Chart pattern. I'm gonna do a video on chart pattern later on, but let's just say chart pattern. One of the chart pattern is the double top or triple top, right? That's like a continuation chart pattern. And we can see now that on the zone right here, we have one touch, two touch, and three touch. So that's like a triple top, right? Which is the market, my reverse, right? And another thing again, I see right here is the candlestick right here. The candlestick right here, right around this area right here, is an engulfing candle. It engulfed the previous candle. So that's also signifying that the market is going to push to the downside. And that's when I'm going to take my trade. That's where I'm gonna take my trade from. You can see, so let's some downtrend. You can put your trade here. If you want to do your stop loss should be above the market structure to give you room. Then you can just target 1:2. And that's it. You can target 1:2, and that's how you can take your trade, right? But like I said, this is just like a basic understanding on how you can take your trade, but there are more to it, right? There are more to it compared to just this, but this is like a basic understanding. They're like trend lines, you can use like Fibonacci, chart patterns, candlestick patterns, whatever you want to use, right? So this is just like a basic understanding on how you can take a trade on a sell, right? So now that I'm done with that, let's look for an example on a buy. Let's see, let me look for, hmm, let's look for a good one on the buy. Okay, this is good. So I'm just going to explain the way I explained previously on the buy, right? We can see that the market is now pushing to the upside. We can see um the ILO and the higher high. So I want lower high. I'm just going to explain that as well, just like the way I explained the down market. So before then, I'm going to explain the market structure change for an uptrend, just like I explained in the downtrend. So for you to know if the market has changed, right, for an uptrend. So let's say the previous direction is a downtrend, and we continue to see downtrend is going down. Right now, if you want to know if the market has changed for a buy, so this is how you know the market has changed or a buy. You can see that this particular one right here, we're having the impulse that gave us the lower low, lower high, lower low, lower high, lower low. And if you want to continue to push to the downside, what are we supposed to expect next? A lower high, right? But you can see that no, the impulsive move broke this previous lower high, which now shows that the market might have changed structure, and that's where you wait for more confirmation, right? Now we can see the confirmation we push down, and when we push down, the retracement move did not break this previous lower low, right? So that also shows that the market is change, actually the fact that the market has changed. So the market actually, we saw the impulsive move right here, right? Broke this previous structure right here. You retraced but did not break this previous lower high. Then the next impulsive move broke the previous higher high. That just confirms that now the market has changed and now you can now buy. And that is how market structure actually works. So now let's go back to the chart. By explaining that, let's go back to the chart and see. Okay, so now we can see, just like I mentioned, we can need a lower high, a lower high. Okay, so we can see right here, just like I mentioned, we have a lower high here. Mm, we have a lower high here. Then we have higher high, higher low, higher high. Oh, sorry. Um, a lower high right here. So we can see right here that the market broke this previous lower high. We have one here and see this previous lower high with this candle right here, right? This impulsive move right here, the candle broke it, this impulsive move, right? So we can see the impulsive move right here came down right here. The next impulsive move broke out of this zone right here. Now it's come here to retrace, and now it's now breaking more structure. So certainly it has solidified that the market structure has changed, and now we should be looking for a buy rather than a sell, and that's how you do. So like I said previously, there are different scenarios on how you can now look for that buy, right? So now let's look for range market. So there is another thing we call support and resistance. If you don't know much about it, I'm going to do another video on how you identify support and resistance. So now I'm going to do right here. We can see right around this area that this is a very significant area. We'll be rejecting around this area. We rejected around this area right here, which was a resistance, right? Then we came here, we rejected it again, it became a resistance. Then we came here, we rejected it again, it also became a resistance, right? Before we now see this market pull up around this area right here, it came back to retest it, and now it's now become a support for it to push to the upside. So as soon as you see the break of structure right here. First of all, the break of structure is a confirmation that the market has changed, direction has changed. And like I explained to you, you've seen the break of structure. So now you know the direction has changed from an impulsive move, sorry, from a downtrend to an uptrend. And now we are going to take a buy. So now that we put this zone right here to show that the market, whenever the market gets to this zone, there is a possibility that the market can retrace from it, right? We get to this zone, and when the market push down right here after breaking the zone with this impulsive move, push down right here, and we're now seeing weak rejections, right? We see this weak rejections right here. Just signifies that the market and gonna reject around that area because there are multiple weak rejections. It's not just one, it's not two, it's about 4 weak rejections. So that solidifies that the market might retrace around that area. So continue to push the upside, and that's where you can now take your trade for a buy, right? For a buy, put it in the previous low and probably target 1:2, right? And that's it. And you can see the market push up like that. But like I said, there is more to that than this, right? This is just like a basic understanding of market structure, and you can build from that. If you are like a complete novice and doesn't know anything about trading, you can start building from that. First, you have to understand how the market works and how the markets move, and the best thing to understand how the market works and move is definitely understanding market structure, which is equals to price action. And now the last explanation I want to make is the ranging market, right? I explained the ranging market. So right here, this is an example of a ranging market right here. Right here is an example of a ranging market. How is an example of a ranging market? If you understand what I did previously, if I put a zone here, I also put a zone here as well, right? You can see, and that's what I was telling you, that the market is not a textbook, because when I did the example, I told you the range market is like this, and it feels like it's always gonna be like in the same way, right? But like I said, the market doesn't have to be. You can see that right here we have this false breakout right here. So if you have bought here without looking for confirmation, you will have gotten stopped out, right? Because that's just a fake out. Yeah. So, and that's why whenever you're trading, you need confirmation before you take your trades. And let me just put it out there, there is no how you're not going to lose in trading. You'll definitely lose in trading because you will never know the direction of the market 100% all the time. You just have to know your hedge and work with your hedge, right? So let me put it out there. You're always going to lose. No strategy is 100%. No strategy is perfect. You take your trade and you lose, and that is why you need good risk management for you to know that this is the amount I want to lose and everything, and that helps you mitigate the market. So this is now the ranging market, like I was explaining to you guys, right? We can see that whenever the market gets to the stop area right here, it pushed down. We got here, we had this false impulse, they come back to that place again, then touch this level, came back here again before we now have the final break. So this particular right here is the ranging market, and stay away from it. To be honest, that's just it. Follow the trend. Only trade when the market is going up or down. It simplify things for you. Don't trade when the market is ranging. It's just gonna give you a lot of headaches, and there's an higher chance of you losing your money. To be honest, so that's basically what how you can start trading and knowing like a simple understanding of the market by understanding the market structure and how the market moves. Then from there you can now implement more things to it based on how you want to trade, like support and resistance, trend line, other blocks, imbalances, Fibonacci, and all that. And basically, that's how you can now start adding more things to the basic knowledge. But this is like the foundation and basic knowledge to start trading if you want to start trading. So this is my quick tutorial on market structure on how to start trading step by step for beginners. I hope you guys enjoy and understand the way I teach. And if you have any questions, please don't forget to leave it in the comment section below. And I'll see you in my next tutorial, guys. Thank you for watching. Bye.